Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra. The much anticipated IPO of HDB Financial Services is all set to hit the D Street on Wednesday, that's June 25, and it will remain open until Friday, June 27. And here's everything that you must know before you think of subscribing to this IPO. Now, as a prominent non-banking financial company, that's an NBFC that's backed by HDFC Bank, HDB Financial has truly carved a strong niche in India's retail finance sector. This is going to be a 12,500 crore rupees IPO. It's among the largest NBFC issues that we have seen in recent times. It's going to be the fifth biggest IPO in terms of the issue size in the last 20 years. And apart from this, the top 5 IPOs in the last 2 decades that include Hyundai, LIC, Paytm, Coal India, and this will be among those largest IPOs that Indian stock markets have seen. It's going to be a main board IPO, of course, which combines a fresh issue of 2,500 crores and an offer sale of 10,000 odd crore rupees from HDFC Bank. Now, the proceeds from this will be bolstering the company's tier 1 capital base for future needs, including the onward lending as well going forward from here. Now, how is the price band of this IPO really fixed? The price band has been fixed between 700 to 740 rupees per share with a lot size of 20 equity shares in its multiples thereof as well. So, if you are a retail investor, you will have to invest in minimum 1 lot that will come to under 15,000 rupees for yourself, and that will get you 20 equity shares. At the upper end of the price band, you will have to furnish 740 rupees as well, and at the lower end, a 700 rupee is what you will have to look at. Now, how is the issue allocation done? Well diversified across all investor categories. So, the QIB portion is fixed at 44.92%. We also have the non-institutional investors category that has a 13.48% of allocation. Retail investors have a 31.44% of the equity allocation that they have done. And the shareholders as well as the employees quota will have a combined of 10.16% allocation that the IPO has done. Each lot of the IPO will cost 14,800 rupees to the investors at the upper end of the price band. Now, bids for more than 13 lots shall be categorized under the non-institutional investors portion. Remember, this IPO includes a reservation of 10% or 1,250 crores for eligible shareholders of HDFC Bank. And shareholders of HDFC Bank who held this stock as on June 19th in their demat accounts will actually be eligible to also apply under the shareholder category as well. So, in case you are a shareholder of HDFC Bank, you have better chances of getting an IPO allocation through the shareholder category and through the retail investors category as well. Now, it is the date when HDB Financial Services had actually filed the RHP in the market. So, as on June 19, if you held HDFC Bank shares, you can definitely bid for a minimum of 20 shares and then in multiples of thereof as well. And the total amount should not exceed 2 lakh rupees, which means an eligible shareholder can apply for a maximum of 13 lots or 260 shares of HDB Financial Services worth 1,92,400 rupees under the shareholder category. Bids by eligible HDFC Bank shareholders in the shareholder reservation portion as well as in the retail portion shall actually not be treated as multiple bids. So, keep that in mind. So, that means you have higher chances. Now, HDB's competitive strengths, what are those? That's something that you should definitely be keeping in mind as well before you look forward to this IPO as a potential candidate for your own stock market portfolio as well. Now, remember, the company was incorporated back in the year 2007. HDB Financial is a retail focused, like I pointed out, NBFC offering loans in 3 verticals. Now, what does it do? It gives out enterprise lending for MSMEs and salaried professionals, asset finance for income generating assets like vehicles and equipments, consumer finance for personal and digital lifestyle needs. Also, it offers BPO as well as fee-based services such as insurance distribution as well. Those are the key verticals that it has. What sets HDB Financial apart is its phygital distribution model. It has 1771 branches, over 1,40,000 dealer touch points, 80 plus brand partnerships, and more than 80% of these brands are located outside India, India's 20 large cities, enabling them to actually tap the underbanked rural and semi-rural markets as well. Now it has over 17.5 million customers, and the company has also cultivated strong base focusing on small ticket, secured, sustainable lending as well. So that's something that you can keep in mind. How is the company doing as far as finances are concerned? As of September 30th of 2024, the company's gross loan book had reached 98,620 crores. That reflected a compounded annual growth rate or CAGR of 21% since FY22. The company's total assets under management now stand at 90,230 odd crore rupees again by the end of September 2024. On profitability front, HDB Financial has a net profit of 2,460 odd crore rupees. That's up from 1620 crore rupees seen in FY22 all the way upwards of 2,400 crores in FY24. Now with a growing loan book and with a solid net worth of nearly 15,000 crore rupees, HDB definitely stands out in the NBFC crowd. Now what is the comparison like with the existing players in the NBFC space is what you must definitely know as a potential investor. Valuations. At the upper end of the price band, that's 740, HDB's valuation translates to a market cap of 61,000 crore rupees. Now the price to book here works at around 3.7, which is almost in the same ballpark as the peers like Bajaj Finance and Shriram Finance, the largest NBFCs that we are talking about. Profitability. Now the return on assets for HDB Financial stood at 2.2%. Return on equity stands at 14.7% as of FY25, the previous financial year. In comparison, Bajaj Finance, Cholamandalam have actually recorded stronger profitability ratios. Keep that in mind. How's the asset quality? HDB's both gross NPAs as well as the net NPA levels are relatively contained, which means they are better than Shriram L&T Finance, but they're slightly higher than Bajaj Finance. That's how the comparison shapes in. For asset quality, HDB's gross NPA we have already discussed, and for the scale that it has, the AUM, the assets under management that I told you, there are upwards of 90,000 crore rupees. It's smaller than Bajaj Finance and Shriram Finance and also Cholamandalam Finance, pointing out to a high growth potential from the smaller base that it has right now. Now, how does it operate? We've already shared with you that they have upwards of 1,700 branches. They are diversified AUM as well, strong focus on the retail category and SME lending as well. It's the largest loan segments include vehicle financing and loans against property. These are their strongest bets at this point in time. Now, what does the bank or the NBFC plan to do with the funds they are going to be raising? Now, they are going to be supporting credit growth, which is underserved in the markets, enhance product innovation. They're also looking at secured and unsecured lending and also to expand the reach across tier 2, tier 3 and tier 4 towns as well. They want to look at the increased operational capacity through digital upgrades, and they also are looking at the HDB's parent firm, HDFC Bank Limited, which still will retain 74% stake in the company post the listing as well, and that adds to the institutional trust, the parentage as well as the operational stability. Now, experts believe, given the overall projected growth for the NBFC sector, somewhere around 15 to 17% over from the current level still about FY27, HDB they believe is strategically poised to gain further market share, especially in the housing linked consumer lending and the MSME financing as well. What is the one risk you should be aware of? Well, the primary risk that most of the experts are pointing out for HDB Financial Services IPO is that the company uses HDFC name under licensing agreement. Any change in this agreement can have any future implications. That's something that you should be watching out for. But for now, what are the subscription figures that we have in terms of what is the advice that is being given by a lot of brokerage houses who are studying this and coming out with their notes? We have SBI Research, we have Centrum, Arihant Capital, Bajaj, all of them have given a subscribe rating to this IPO for the long term, and that's something that you should keep in mind. Of course, tomorrow tomorrow is when the IPO hits the D Street. We will get more and more voices to talk about whether this IPO should be looked at from an investment point of view. So stay tuned for a coverage that should also indicate to you how is the grey market premium indicating. So keep watching Business Today Television. We will get you as in much information that we have for HDB Financial for you to take better decision.
Now being joined by Amin Sophia Meher, who is an adjunct professor of philosophy at the University of Central Oklahoma. Amin, how do you make out and interpret this statement